This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for gains as President Trump suspends tariffs on Canada and Mexico for 1 month. US equities trimming losses, with traders enduring another day of whiplash around the trade negotiations. Canada agreeing to crack down on fentanyl, while Mexico will send 10,000 officers to the border as Trump strikes deals and calls with their leaders. Investors now watching China for its response, with a threatened 10% tariff due to come into force in hours.
And it's such a tricky situation for Beijing, isn't it? Because they're still away on Lunar New Year holidays. The markets don't open until tomorrow. And we've seen in 2018, when the U.S. tariffs came into effect, Beijing immediately had some reciprocal action. Well, we'll be watching today, especially this afternoon, as the offshore yuan holds steady right now at that 730 level. Of course, it's still around record lows. We continue to watch the markets because we might get some upside and some positive moves, especially after the tariff delays. Now the confirmation coming from Canada that those tariffs will be delayed by a month as well. We had already heard from Mexico. The Japanese yen, surprisingly, has been stronger this week. It's been acting as a safe haven currency again. Really, this year, the only G10 currency that's actually gained ground against the U.S. dollar. But of course, the volatility has been immense when it comes to the greenback. Take a look at U.S. assets as well, because we had the dollar touching that 2-year high before actually paring back most of those gains after the news on the tariff delays. And it was so volatile. I mean, global markets got whiplash as the Mexican peso was one of the worst performers in the session to become one of the best performers in the session after the news broke. We are now seeing the CAD also still at around that 2002 lows that we haven't seen in about 2 decades or so. U.S. futures pointing to the upside. We had seen losses of about 2% being reversed. Most of those losses were brought back, especially as we watched those auto sectors, chip makers as well, where the tariffs could hit the most, Heidi.
As you say, whiplash is where we're sort of at the moment, right, Shery? Let's bring Bloomberg's political news director, Jody Schneider, who joins us out of Washington. So when it comes to Mexico, when it comes to Canada, we've seen a bit of respite, at least temporary postponement. What did we see throughout the course of all these developments today?
Yeah, it was quite a day. We started with the, the countdown, if you will, to the tariffs, these 25% tariffs taking effect at midnight local time here in D.C. And then this morning, after a phone call that the president that President Trump described as a very good call with Mexico's President Sheinbaum, that those tariffs were going to be removed. As President Sheinbaum said, she'd be sending 10,000 troops to the Mexican-U.S. border to help stem the flow of drugs and also to ensure that there were not going to be illegal border crossings, something that, of course, President Trump campaigned on very heavily. Then later, so it looked like it might just be Canada Mexico getting off the hook with the tariffs. And then he had a phone call. He had 2 phone calls today with Justin Trudeau, the Prime Minister of Canada. After the first one, the president didn't seem to be all that excited. The second one, we heard from Justin Trudeau that President Trump said they would be removing the tariffs or delaying them a month in both cases, in Canada and Mexico's case, and that they would be they would have a fentanyl czar in Canada, and they would be taking other steps to stem the flow of fentanyl, which has been President Trump's main complaint about Canada. Although he has said he wants it to be a 51st state. He even mentioned that today in the signing of some executive orders, although he did say, well, that's probably a long shot. However, it looks like those tariffs are off, at least for the next month. But we have to see what happens with China. We have not heard about that. Chinese reaction was muted to the 10% tariff announcement, that would go into effect. Still has some time not to take effect, but at this point, there don't seem to be any calls or any contact immediately planned between President Xi Jinping and President Trump.
And Jody, as you said, one of those executive actions that President Trump took, it was about the announcement of a sovereign wealth fund. Take a listen.
It's a very exciting event. We're going to have a sovereign wealth fund, which we've never had. We have a lot of things that create wealth, and you're seeing that over the last 2 weeks. I think we've created more wealth. Other people have created de-wealth, the people, my predecessors. We're creating a lot of wealth.
And some saying this could be used to facilitate the sale of TikTok. What do we know?
Yeah, so he did sign that this afternoon with his Commerce Secretary and his Treasury Secretary in the room, and they are going to be tasked with heading this up or certainly facilitating it. It's interesting because usually sovereign wealth funds are in countries, that have big surpluses or, have a lot of extra cash. And we're talking, there's a big one in China and there's one in Saudi Arabia. Norway has one. The U.S. has never had one. The U.S. has huge deficits. So it's a little surprising. President Trump had said he wanted to do this earlier, and now it appears he's doing it, and perhaps partly for this sale of TikTok, which he said he wants the U.S. to arrange. He's allowed TikTok to stay, people to be able to continue to use TikTok pending a sale from the Chinese, and perhaps this will be the way to do it. But it did surprise people. The U.S. has not really had a sovereign wealth fund before, and how this will work is still somewhat unclear, and the details perhaps will come soon.
Bloomberg's political news director Jody Schneider there joining us from Washington. And on that delay of tariffs for Mexico, the Mexican president Claudia Sheinbaum agreed to send 10,000 National Guard officers to the border to stem the flow of migrants and fentanyl into the U.S., while President Trump pledged to prevent trafficking of high-powered weapons into Mexico.
In terms of trade, my proposal was the same one. Why don't Mexico's Secretary of Economy and the U.S. Secretary of Commerce work together so that we can also get results and learn about these issues? Then he agreed, and at the end asked me how much time I wanted to put on pause. I said, well, let's put it on pause forever. And he asked how long. I said, let's put it on pause for a month. And I am sure that in that month, we will be able to have results. Good results for his people and good results for Mexico.
The Mexican peso rebounding as the two leaders stick to that deal after earlier weakening some 3% against the U.S. dollar. Let's bring in Bloomberg opinion columnist JP Espinetto in Mexico City. JP, we can see the immediate market reaction, but it's really about the impact on Mexican assets, the Mexican economy, even if those tariffs are delayed.
Yes, exactly, Shery. And I think, no doubt this was a very big win for President Sheinbaum today. She managed to talk to Trump, initiate these negotiations, and postpone, more importantly, the tariffs for a month. Now, the issue is that the uncertainty over investments in Mexico remains. We don't know if these tariffs will ever be imposed, but that's not needed to affect the confidence on investing in Mexico. That's what I am arguing in my column today. If we're going to have a White House that doesn't like the USMCA trade agreement that was signed in 2018, then the prospects of big multinationals to invest in Mexico, to be part of the supply chain, to send exports to the U.S. and be sold there, that argument it's hurt, and I'm afraid it could be hurt for a long time unless we have full certainty that these tariffs will never be imposed.
How much damage is there to, I guess, the more sort of existential idea of the integration for Mexico's economy to the U.S., which has been building up over decades, right? Does that take a meaningful hit?
Yeah, I mean, in the short term, economists expect the economy to fall into recession. Remember, Shery, that last year Mexico only grew 1.5%. That's even less than the U.S., right? This is an emerging country that should be growing 5%, and instead is growing less than a mature market like the U.S. So the idea of imposing tariffs will send the economy into recession. The prospects for these years are just off 1% of growth. And as I said, the problem is that we don't have that certainty that if you come here to invest in Mexico, your rights are going to be respected and you're going to be able to send tax-free these goods to the U.S.
Bloomberg opinion columnist JP Spinetto there. Let's get some more perspective on this with Jenny Gordon. She's a non-resident fellow at the Lowy Institute and an honorary professor at the Centre for Social Policy at Australian National University, and she joins us now. Jenny, great to have you with us. And I kind of wanted to pick up on what JP was saying in his piece, because it's not just about whether there are tariffs, how much there are, and when they come into effect, right? Or whether they're, subsequently sort of put on hold or withdrawn as a result of a deal being struck between President Trump and whoever he's dealing with. How damaging is that uncertainty that JP was just speaking of?
Well, it's very damaging because, agreements are meant to be there to give certainty to investors. And when you have that kind of uncertainty, you really put a chill on investment, and you don't know that you can trust, being able to keep the terms of the agreement. And in fact, this is the big challenge, is this undermining of the whole sort of international rules that everybody had agreed they'd play by. And we've seen this, in the first President Trump round, and now we're seeing it again. But I think we've seen it as a more general trend, even under the Biden administration. So very problematic.
Do you expect that this sort of to and fro, the uncertainty could lend damage to the idea of US exceptionalism, US economic exceptionalism, trade, investment exceptionalism, particularly with concerns over, what the policy might be to do with the US dollar as well?
Yes, that's a nicely way to put it. US exceptionalism, I think it's interesting. The US has got this sort of rhetoric, and it was there in the Biden administration and there that the rest of the world has been sort of soaking the US and doing well because, it has provided them with everything. And in fact, the US has benefited enormously from that sort of rules-based order that they helped establish and that they maintained. And so that comes in is what really US exceptionalism is about. It's the fact that when markets get uncertain, you've got a flight to the US dollar. When markets get uncertain about the Australian economy, there's a sort of a flee from the US dollar rather than a flight to the US dollar. And we saw in Britain, when they had, policy that clearly didn't add up in terms of their budget deficit, the pound plummeted and you had a financial crisis that had to be averted. And so the US exceptionalism is the fact that the markets have not punished it in the same way they punish pretty much every other country when they do policies that will blow out the budget deficit. And so you've got this sort of willingness to keep investing in the US. It's a big, diverse economy. It can do a lot of things that other countries can't do that are really reliant on the international trading system. And so it's really sort of sad to see the US almost take an isolationist stance, though today's, back down on the tariffs, how much this is more about power dynamics than actual economic policy is something I think we're going to see.
That's the point, right? I mean, Canada and Mexico caved in pretty fast. President Trump was happy to get whatever he could. What about China? How willing will Beijing be to play along with Trump?
Ooh, good question. I really don't know. It's the pathway that the US was heading down would have seen China become much stronger in terms of countries needing to turn to China for that kind of trade stability and investment stability, because the US is no longer offering that. And so in many ways, China's got an interesting game to play, because the worse the US behaves, the more it benefits China. So it is going to be interesting to see whether they try and dampen down the whole tariff rhetoric and by making a deal and saying, well, this is the pathway. What we do is, there's a threat of tariffs, countries make a concession. How material that concession is an interesting question. It may be very material. It may be quite immaterial. Having a fentanyl czar when very little fentanyl crosses the border from Canada is one of the classic examples. What can we do that gives you the visuals that you need to be able to satisfy the requirement that Trump can tell his base he's doing something to help them? And so whether China plays that game or whether China decides to play a long game and actually go, well, we don't really care if the US implodes. It's all in our favour if they do. That's the really interesting question, and I have no idea about the answer to that one.
And then the thing is, I'm curious about how this also plays out, right? Because China right now is on a Lunar New Year holiday. These tariffs are supposed to kick in today. We have seen in the past in 2018 that as soon as the tariffs went into effect, China would come back immediately and put reciprocal actions. So will we go that far is my question. And how long could that go on for, and how disruptive would that be until things cool down and they perhaps reach or not reach an agreement?
Well, we've already seen quite a lot of Chinese sort of the value chain move into other countries in Asia. And so you saw, if you look at the growth in trade corridors, that one of the fastest growing trade corridors is US-Vietnam. And a lot of that is coming through because you had China putting more of their elements of their value chains into countries in the Asian region, which has been quite beneficial to those countries as well. And so you can sort of see that longer-term strategy that they've had to help, future-proof themselves a little bit against some of these tariffs. So the question is going to be how Trump actually applies those tariffs and whether he'll look at it and say, well, there's, Chinese content in the imports we're buying from Vietnam, and so we've got to have a proportional tariff, something based on something called of origin, or whether it'll just be no, only those things that we know are coming directly out of a Chinese port. So those are going to be interesting questions. There's been a lot of transshipment has gone on with that first round of Trump. And so you've seen this develop over time, and we've got a different, sort of market dynamics in there. My guess is that they'll do something showy and try and target some of Trump's base. Last time they targeted soybeans and some of the farming products. They also had a very, active social media and media campaign trying to get the farmers to understand that the costs this was imposing on those countries or on the farming community. And so you saw the US government under Trump in the first time give them very large subsidies to compensate the farmers for that loss of market. So it's going to be interesting whether they try and do it again. And you've got some fiscal hawks that are sort of saying we're trying to bring down the US budget deficit. So Trump's going to face some interesting dynamics within Congress of some of the Republicans who still care about the budget deficit and will not necessarily want to have massive expansion in spending in things like to compensate constituents that will be negatively affected by China's retaliation.
Jenny, really great to have you and sharing those views with us. Jenny Gordon, who's a non-resident fellow at the Lowy Institute and honorary professor at ANU. Coming up on The Age of Trade, the CEO of India-based biotech company Biocon, joining us to discuss their third quarter earnings, their business strategy and operations amidst, of course, these ongoing trade tensions. We'll also be delving further into this Trump tariff uncertainty with UBS and take a look at the potential impact of that on Australia's trade with the US. Much more ahead. This is Bloomberg. As we continue to watch the market reaction as Asia wakes up to some significant developments in these trade threats, of course, set to rebound now after President Trump delaying those tariffs on Canada and Mexico for 1 month after those calls with the respective leaders there. Taking a look at Treasuries, we did see the curve re-steepening, losses in the front end, kind of shifting back a little bit after we heard the news on Mexico on that delay. Let's bring in Garfield Reynolds, who leads our MLive Asia coverage. And so the whiplash continues. This is ultimately, I guess, at least for now, a good news of respite.
Is it?
I'm
really not sure. I mean, the tariffs have been delayed for 30 days. The reasoning behind why they were delayed there's not a whole lot of clarity on that. not a whole lot of sense. Many of the allegations that President Trump pushed against Mexico and Canada as justifications for the tariffs were very strongly rejected by those countries. Now, they are now doing things which are window dressing, as it were, to seemingly mollify President Trump. From his previous presidency and his overall general attitude, there's every chance that next week he could decide that not enough is happening. In the meantime, the tariffs are hanging over them there. We have to ask now, what happens with the South African tariff threats? What happens to, if they were tariff threats, or was it just funding? What happens to Europe? What happens with China? And even if there are delays across the board, there's still going to be the threat of tariffs hanging over everything until, at the very least, April 1, which is when the Commerce Secretary is supposed to report on global trade imbalances. So we've swapped immediate certainty of pain for lingering uncertainty.
I mean, you're right. This does seem like window dressing, right? A lot of it seems to be for show. So how much longer are we going to be trading headlines at this point? I'm really curious about how Chinese assets are going to come back after the Lunar New Year holidays on Wednesday.
Well, as to how long we might be trading headlines, I think 4 years. That's probably a reasonable guess.
Oh, my goodness.
More concretely, with China, I think, in fact, for Chinese assets, this overall picture is a net positive. I think they'd be happy that they were on holiday for the last week or so, but even if there's no delay, and it seems very likely there would be one once Xi and President Trump can get on the phone and tell each other how much they respect one another. 10% is far from a worst case scenario for Chinese assets. There's even, if you look at the way Hong Kong shares were far more resilient yesterday than most of the wider world, I think that's a tribute to expectations that China, if anything, is likely to be galvanized towards more stimulus, towards doing more to help its economy from within. And that's been one of the big things that investors have been looking for. They haven't been looking for a nicer approach from the US towards China. That wasn't going to happen even if we had had a different result in the US election. What they have been very keen on is that the Chinese government will take concrete measures to stimulate its economy. And if anything, what's gone on over the past week increases that chance. That's positive for Chinese shares.
Catherine Reynolds, who leads our Markets Live Asia coverage there. With that markets take, more ahead on the Asia trade. This is Bloomberg.
Take a look at how oil prices are trading at the moment. Of course, we're watching commodities as tariffs of 25% against Mexico and Canada were supposed to go into effect today. They've been delayed now by about 1 month. We are still seeing some downside pressure on WTI in the Asian session. This is Bloomberg.
Take a look at currencies as, of course, we see that big reaction and the reprieve that we've seen for the Canadian dollar, the Mexican peso, both seeing rebounds as those US tariffs have been delayed by 1 month. They've struck deals, of course, with President Trump to get that reprieve. We saw the loonie surging more than 1%. The peso was up around 1.5% at one point after those announcements, so very much reversing those earlier declines, looking a little bit more muted at the moment. We see the Bloomberg dollar index there at the moment not doing terribly much. We are also watching some of the Asian currencies in question. The yuan, for example, CNH pairing those losses. We did have one report from the Wall Street Journal citing people familiar with these discussions that perhaps part of Beijing's response to the US tariff threat would include a renewed pledge not to devalue the yuan for competitive advantage. So we're watching certainly that return to markets, Shery, for mainland assets.
Right, and we continue to watch, of course, the Indian markets. We have seen a big sell-off since October. The Indian government now trying hard to appease the new U.S. administration as well. In a matter of weeks, Prime Minister Narendra Modi has conceded on issues close to Trump's agenda, including cutting tariffs on imports and accepting undocumented migrants from the U.S. Indian officials have told Bloomberg that New Delhi has more to gain than to lose by maintaining friendly ties with Trump. Tata Motors is keeping a close eye on Trump's trade policies and their possible impact on the Chinese market. CFO BP Balaji told us exclusively that they're ready to reassess their business strategy if necessary.
I think this is a new normal that we are trying to comprehend as we speak, because things are coming thick and fast, so we need obviously time to process the changes, and more importantly how the response happens, not just vis-a-vis country to country, it's also in terms of what happens to financial markets, what happens to currencies. So I think from our perspective, we are trying to keep it clear and focused, otherwise we'll end up panicking everywhere.
India-based pharmaceutical firm Biocon last week reporting a 96% year-on-year drop in quarterly net income, but it's forecasting a recovery in the generics business in the current period as it launches an obesity and diabetes treatment in the EU and UK. The pharma sector was also a beneficiary of India's annual budget delivered at the weekend, with dozens of life-saving medicines getting exemption from customs duties. Joining us now to discuss all this is Biocon Group CEO Peter Bains. Peter, it's great to have you with us. First of all, would you be able to give us some of the background of the results that you got? They seem pretty challenging recently. And where do you see the bright spots for this year?
Sure. Thank you, Shery. So on the quarterly results, I think it was overall a positive set of results and a progressive set of results. So we saw at the group level operating earnings up 10% and EBITDA up 16%. The net profit numbers that you referred to were unadjusted, and if you adjust them for some significant transactions last year in the branded formulations business in India, we actually saw a growth in net profit. So I think that's important just to correct that. Highlights included, strong growth in the biosimilars business, 14% in operating earnings, and a recovery in growth in our contract services division, Syngene, which saw operating revenue grow 11%. The generics business saw a small decline of 2%, but on a sequential basis was also up 6%. So a kind of a growth story coming through on those numbers.
Your biggest revenue source right now is the United States market, but given, of course, the tariff concerns right now, President Trump has already talked about potential tariffs on pharmaceuticals. How much of a concern is this for your business?
Well, I think we're clearly watching it, and I think the administration will have to sort of balance this carefully. The United States, up to 90% of volume of medicines is generic, and India is a very significant contributor to that, 40%. So if tariffs are imposed on pharmaceutical imports from India, that will really be not good for patients. Prices will go up, not good for insurance, and will really be importing inflation. So I think it's a balancing act to balance, accessibility and affordability, where India plays a strong part in supporting delivery and cost and affordability and access of medicines in America.
When it comes to some of the measures announced at the weekend's budget, was there anything that struck out to you as being, having meaningful implications for your business?
Yes, I mean, I think as you touched on, we welcome the duty exemption on imported critical care products. We'd have liked to see that go wider and maybe GST reduced on all cancer products and chronic care. That would really make a difference to access and affordability to a much wider patient group in India. I think we're pleased to see other measures on stimulating innovation, and upskilling the labor force in India, some very good initiatives there. And I think sort of broadly, again, see that the budget is positive and progressive, particularly on the sort of domestic front to maintain economic expansion and growth. I think more widely, it could have been a little bit bolder and ambitious in terms of driving initiatives to ensure India's competitiveness in the sort of fast-moving geopolitical world where, I think the opportunities for India to attract more capital inflows and innovation for enterprise, still remain to be addressed.
Tell us about the obesity portfolio. Obviously, that's, what Biocon is really banking on for the most growth. Do you expect this level of sort of skyrocketing global demand to continue?
So on the innovative side, that's clearly the trend. I mean, what we do is when the drugs lose exclusivity, we provide the biogeneric equivalent. So we'll be looking at entering the market for liraglutide, rolling that out in the UK and Europe where we have approvals in hand, and then beyond that into other geographies and into the US later this year. But the skyrocketing sales that you see at the innovative side will be entering on the generic side. The first product to lose its exclusivity is liraglutide. That's a relatively small part of the market, still very attractive to us. And we're, preparing to launch that now as we're also building and getting prepared to launch the much bigger opportunity with semaglutide starting in a couple of years' time. And as you said, we're preparing for all the major GLP drugs for diabetes and obesity, and we'll be rolling those out over the coming years.
Peter, you mentioned earlier some transactions that affected your latest quarter. Tell us a little bit about what more is expected this year, some of the projects that you're thinking of, and perhaps some pipeline drugs as well.
Sure, and it's really the pipeline and new product launches that are the story that we're looking at to build on the growth momentum we're seeing. In the biosimilars business, we have 5 monoclonal antibodies to introduce in the US market over the next 12 to 18 months and 3 on a global basis. And those will be playing into areas of strength that we have in oncology and immunology and broadening out into others in eye care. And it's really this new wave of product launches over that sort of, relatively near term, 12 to 18 months, that's providing us with, encouragement around the sustained growth that we're seeing through the business. Good also to see the recovery in Syngene, our services arm, where we saw, strong 11% comparable growth on the quarter, recovering from 2 years of degrowth. But now we're seeing, I think, a return to investment in the biotech sector, which is a big customer for us. And we're seeing, good pickup in the transition from pilot studies into larger scale projects coming out of new customers who are, I think, sort of looking to diversify their pipelines out of China, and India's a natural recipient there. And Syngene's picking up good business on the back of that tailwind.
Peter, we really appreciate your time today. Peter Bains, Group CEO of Biocon. Let's take a look at some of the other stories we're tracking this hour. And Panama is promising free passage for US warships through the Panama Canal and says it will withdraw from China's Belt and Road Initiative. That's after Secretary of State Marco Rubio blasted the government during his visit on Sunday. President Trump has suggested the initial concessions were not enough and says he wants a canal back or a strong agreement. The Secretary of State has told Congress that the U.S. Agency for International Development may be abolished after a review. According to a letter seen by Bloomberg, Marco Rubio wrote that the current foreign aid process does not benefit the American people. He says some operations may be integrated into the State Department, with others shut down.
I'm the acting director of USAID. I've delegated that authority to someone, but I stay in touch with him. And again, our goal was to go in and align our foreign aid to the national interest. But if you go to mission after mission and embassy after embassy around the world, you will often find that in many cases, USAID is involved in programs that run counter to what we're trying to do in our national strategy with that country or with that region.
President Trump wants an agreement with Ukraine to access its rare earth resources in exchange for US aid. Ukrainian President Vladimir Zelensky last year offered Western allies access to what officials said were trillions of dollars of raw materials in exchange for ensuring Kyiv's security. Trump has said that he aims to reach a negotiated end to the war between Russia and Ukraine. Take a look at what we're setting up when it comes to the broader Asia session. We do have Aussie stocks online for just about 3/4 of an hour there. We are seeing some broad upside, 0.7% there. Remember, quite a lot of losses that we saw yesterday was really across energy as well as more of the sort of metals and commodity space on account of that weakness expected to come through from China. We do have still that question mark over what those tariffs on China will do if they come into place, or if a reprieve is given the way that we've seen with Canada and Mexico. We're seeing broad upside when it comes to the futures picture there. Coming up next, OpenAI and SoftBank are forming a 50-50 joint venture to sell AI services to Japanese businesses. We have more details next. This is Bloomberg. We will be watching SoftBank shares in the next hour after the tech giant announced a JV with OpenAI that plan to sell AI services to businesses across Japan. Let's bring our tech reporter Annabelle Jewellers for more. So what do we know about this?
Yeah, well, the big goal, as you mentioned, essentially is getting people to use more AI tools in Japan. And Masayoshi Son, but others, they would also say that AI penetration or usage in Japan is low, especially when you compare it to places like the US. So to do that, as you said, OpenAI and SoftBank, they've announced this joint partnership or a 50-50 partnership. It's going to be hiring 1,000 people across the country. And the idea is to make or to market OpenAI products to a range of different industries. So from the likes of automakers to retailers, SoftBank's own group companies, they're as well going to be using ChatGPT and integrating that service for around $3 billion a year. So the win here is very much clear for OpenAI and also for SoftBank as well. It just really underscores how the country, or company rather, is continuing to play a bigger role in developing AI around the world, because it comes just hot off the heels of the Stargate endeavor that was announced just a couple of weeks back. That also involves SoftBank, OpenAI, Oracle in the US. Share price reaction-wise, you can see here over 5 days, we're up around 3%. But yesterday, it closed about 0.5% higher. We will, of course, be monitoring at the open of trade in about 15 minutes. Yeah, well, and Japan is just one stop on Sam Altman's tour. Yeah, that's right, Shery. He's actually got a very busy lineup, really, over the next couple of weeks, from Tokyo to Seoul, across to Germany, New Delhi, actually, before that, and then finally in Paris next week. But it is, of course, very interesting in terms of the timing, because there was the big shockwaves that were caused by DeepSeek, the Chinese AI player, last week. And so part of this probably is going to be for Sam Altman to be ensuring or reassuring investors, developers, industry leaders over the future of OpenAI. But as I said, Seoul is the next place. He's going to be there on Tuesday. We're already getting reports of who he's going to be sitting down with. Some of the groups we've understood from local media are Samsung, possibly also SK Hynix, and Kakao is also another name that's been thrown in the mix. And actually, we've already got local media reporting that Kakao, which is South Korea's dominant mobile platform, it could be announcing some sort of partnership with OpenAI, possibly to be integrating ChatGPT into its own AI conversational app or conversational AI app. And the market reaction, you've actually already seen that as well, because yesterday closed around 9% higher, adding to Friday's gains rather of 7%. So clearly investors are looking forward to possibly some sort of announcement later today. Our tech reporter Annabelle Jewellers there with the latest. As we're also following Japan's earnings day today, busy day. MUFG reports quarterly earnings today, with the country's biggest lender expected to show it's on track for a record annual profit. Traders will also be watching Nintendo's forecast ahead of the launch of its new gaming console, the Switch 2. Let's get more with our Asia investing editor Russell Ward and Japan stock reporter Alice French. Alice, let me start with you, because we have seen this huge sell-off in tech stocks, and it seems that gaming is perhaps one part of the market that's pretty much isolated.
Yeah, so as you say, we saw last week a massive sell-off in tech stocks, particularly chip stocks and sort of high-tech stocks on the back of this worries about DeepSeek, the Chinese, the lower-cost Chinese AI model there. And gaming stocks like Nintendo, like Konami, like Sony as well, they actually won out during that rout, and that's because investors are hoping that there'll be somewhat of a safe haven amidst all of this sort of tech volatility that's happening. Obviously, game producers, they rely more on software and intellectual property, which is not as, I suppose, exposed to those kinds of risks. Not only the China competition, but also things like tariffs that, of course, Donald Trump is going to be imposing. So it does look like Nintendo is a big winner in amongst that. Of course, they have the Switch 2 coming out, like you say, but they also have other sort of IP sources of revenue. They've got theme parks now, they've got movies coming out, and so that's seen as really attractive within the tech sector, which is seeing a lot of volatility and uncertainty.
We are seeing also a lot of trading and reaction to just the broader market environment. Russell, when it comes to perhaps banks, they are seeing that huge rise in net income because of rates rising. What are we expecting from earnings, given also what we saw yesterday as well?
Absolutely. So we're expecting MUFG to round out another strong earnings quarter for Japan's biggest banks. We had Sumitomo Mitsui and Mizuho both beat expectations, leaving them on course for record profit, and we're expecting the same from MUFG, and as you mentioned, that's one of the big drivers is the BOJ's rate hikes, which is boosting their lending profitability at home after languishing for many, many years with negative rates. And there's a couple of other more drivers. One is the sale of cross shareholdings. Japanese banks have been selling their shares and other client companies, booking hefty gains on those. And then the third driver, perhaps unusually for a lot of people, is the weak yen. So Japanese banks, do a lot of their business abroad these days, and so those repatriated earnings are looking pretty good in yen terms.
Alice just mentioned the potential of that impact coming from tariffs on companies like Nintendo. But when it comes to banks, I mean, you mentioned the weak yen. Would there be any indirect sort of impact on the financial sector here in Japan?
Yeah, I mean, I think the volatility is something that banks can actually gain from, particularly the securities firms, Nomura and Daiwa. We're going to see Nomura reporting tomorrow. That Nomura is expected to join Wall Street banks in benefiting from the trading environment that they benefited from with the last quarter with the US election. That's expected to continue. And perhaps another tailwind for financial firms is the regulatory environment. So in the US, the trend of deregulation there is probably going to have some impact on the Japanese banks, but then against that, of course, the threat of tariffs, global disruptions, geopolitics, they're all potential headwinds for the banks, as they are for many other companies here in Japan.
Alice, when it comes to the tariffs, talk to us about potential impact, especially when we are seeing these companies like Nintendo or even Sony sort of transform into what you say a bigger sort of company that encompasses everything from entertainment to services.
Yeah, so of course there are still downside risks. As we know, Nintendo is set to release this big Switch 2 console later this year. There's a lot of excitement, and that's really driving a lot of optimism for the share price too. But of course, tariffs would be a risk. A lot of analysts saying that when the Switch 2 comes out, almost half of those sales could take place in the US. And so obviously, if Trump were to go ahead with a blanket tariff on all imports, that would really hit sales of the Switch 2 and really hit Nintendo's earnings as well. But, as you say, the good thing for these gaming companies is that they do have that IP to fall back on, and Nintendo has really been focusing on diversifying that over recent years. And so there are still a lot of upsides, and I think that's what we're really seeing drive the record high share prices that Nintendo is having, despite not such strong earnings recently.
Alice French and Bloomberg Japan stock reporter, and Russell Ward, our Asia investing editor. Thank you so much for really taking a look at some of those big earnings that we do have coming up this week. More ahead on the Asia Trade. This is Bloomberg.
Let's get you the latest when it comes to the corporate headlines that we're following. In China's Evergrande's EV unit has cut more jobs to preserve cash as the search for a buyer or investor continues. The EV maker initially aimed to take on Tesla and had a market value that topped Ford, but it was swept up in the debt crisis that engulfed its parent company. Evergrande NEV says its available cash is going toward maintaining production plants and machinery. The European Union is said to be preparing an investigation into an e-commerce platform that's Shein over selling illegal products. The European Commission will lead regulators in a coordinated action against the Chinese-founded online marketplace, with any fines decided by national governments. Chinese-owned Temu and Apple faced similar actions last year. Palantir shares jumped in extended trading after a full-year revenue forecast that exceeded analyst estimates. CEO Alex Karp attributes the result to untamed organic growth in demand for its AI software. Best known for its national security work and more recently its AI platform, Palantir's stock surged 340% in 2024. Shery.
Heidi, take a look at some of the stocks that we'll be watching when trading opens in Korea and Japan. Of course, automakers in focus, given that President Trump delayed his threatened tariffs on both Canada and Mexico by 1 month. We had seen a big sell-off in global automakers, not only Japan, also South Korea, not to mention the U.S. as well. They, of course, not only have exposure to Mexico, but also to China. The tariffs could have cut into sales from factories in Mexico and Canada, affecting car makers, including, of course, the likes that you see on the board right there. But take a look right now at the broader markets as we're setting up for the Asia Open. Of course, after that tariff delay, we could see some upside. You're seeing Nikkei futures now pointing to the upside after losses in the previous session. Also, keep watching the Japanese yen, a little bit of losses against the U.S. dollar after Trump delayed those tariffs. But it's been acting as a safe haven currency again recently. It's the only G10 currency to remain higher versus the greenback this year. We have the market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens and perhaps a relief rally after President Trump delayed those tariffs on Canada and Mexico. But Heidi, the big question now is what happens to that 10% tariff on China, expected to go into effect in just a few hours. And if that goes through, what will happen to Beijing's reciprocal action? They're still away on Lunar New Year holidays.
And the question really is, it is a temporary reprieve, but is it almost sort of a little bit more uncertainty, given that we may be back at this point of uncertainty again in 30 days? But you're right, Shery, it really is watching Chinese assets and the Chinese sort of policy reaction as they come back from this prolonged holiday.
And in the meantime, we have seen that whiplash in the markets throughout, right? I mean, the Mexican peso just plunging, then reversing those losses. Then Nikkei right now coming online with gains of more than 2.6%. This, of course, as we had losses in the previous session. And even the Japanese yen, for the first time in a long time, sort of acting as a safe haven currency this week. Right now, we're seeing those losses against the U.S. dollar on that tariff delay and that relief that we're seeing across markets. The topics gaining 1.3% as we continue to watch those automakers that were expected to take a hit from those tariffs on Mexico and Canada. Of course, that's not done. That's been delayed by 1 month. So we'll continue to watch the implications there, as we're also watching, of course, a monetary action, perhaps here in Japan, from the BOJ and what comments we can get about the weakness of the currency. Take a look at how the Kospi is also coming online. That's another market that has been really exposed to global trends, right? I mean, we had been watching the semiconductor manufacturers, a big really boost for the South Korea market. That sector was also threatened by tariffs. We're seeing the Kospi gaining about 1%. We're also watching Samsung today because OpenAI's Sam Altman is going to go talk to them. He had already talked with SoftBank here in Japan. He's in a global tour. He had announced a joint venture with SoftBank. The Korean won strengthening a little bit, 0.3%. Heidi.
Take a look at how we're faring in Australia and Shery. We saw the benchmark falling most in about 5 months, and really a lot of that was sort of those broader China-exposed stocks like the big miners. We are seeing a bit of a recovery on that front as we have at least a temporary alleviation of that tariff threat. We're seeing broad upside, about 0.6% for Aussie stocks there, but really that leadership in the rebound in not just miners but also some of the banking shares there as well. We're watching the Aussie dollar is pretty flat at the moment. We did see some pretty big moves when it comes to the Bloomberg dollar index overnight, and watching oil in particular as we see those declines holding after the delay of those Canada and Mexico tariffs by a month. So really kind of wiping out some of those gains on account of that reprieve on its two biggest foreign suppliers of crude for the US. So we saw WTI at this point just erasing all of Monday's gains as well. Brent crude closing near $76 a barrel there. So this after, of course, an almost 4% gain on Monday, which had been the biggest intraday advance in almost 4 months. And of course, we're still awaiting potentially changes from OPEC Plus as well this week, Shery.
Heidi, let's get the latest on Trump's tariffs with Bloomberg's political news director, Jody Schneider, joining us from Washington. Jody, this and also our Mexico Bureau Chief, Carolina Millán. But Jody, let me start with you because this seemed very much almost for show. It was very fast the way that Mexico and Canada caved in, but also President Trump sort of happy to take whatever he could get. What did we get?
Yeah, so you're right. Today was one of those roller coaster days. The deadline was going to be midnight tonight, D.C. time. And within several hours, we saw first Mexico with that call between Mexico's President Sheinbaum and President Trump. That tariff fell away, or at least for the next month, with the Mexico agreeing to put 10,000 border agents or guards at the border to stem the flow of fentanyl and also to deter border crossings, both requirements that President Trump wanted. And then this afternoon, with tweets and information from both men after a call between the Canadian Prime Minister and President Trump, the Canada's the purported or the threatened tariff falling away for at least a month after Canada said it would create a fentanyl czar, would help the U.S. in terms of organized crime, and would do other things to try to slow or stem the flow of that drug into the U.S., a requirement of President Trump. So it all kind of fell away. We saw this a week ago, by the way, with President Trump in Colombia. Colombia had was kind of demurring and taking its migrants back on a military cargo plane. And after President Trump threatened 25% tariffs against them, they relented as well. So this does seem to be the modus operandi of President Trump to threaten this and to try to get something. However, with China, that 10% tariff looks like it's going to go into effect unless there's some last-minute call between President Xi Jinping and President Trump, which we have not heard about. President Trump today said he would like to talk to the Chinese leader, but didn't say there was a specific time to do so, and had said China's tariff will take effect.
Carolina, of course, President Trump talking to the Mexican president. Take a listen to what exactly she had to say.
In terms of trade, my proposal was the same one. Why don't Mexico's Secretary of Economy and the U.S. Secretary of Commerce work together so that we can also get results and learn about these issues? Then he agreed, and at the end asked me how much time I wanted to put on pause. I said, well, let's put it on pause forever. And he asked how long. I said, let's put it on pause for a month. And I am sure that in that month, we will be able to have results. Good results for his people and good results for Mexico.
The thing, Carolina, is that we are seeing the impact on Mexico already, whether or not these tariffs go into place.
Shery, I think what was really interesting about the clip you just showed is the great spirits that President Sheinbaum was in. We haven't seen her this visibly excited, probably since she took office in October. And as you saw, she highlighted that it seems that, over the weekend, we saw that Sheinbaum was offering two ways out for President Trump. She was saying that the country would potentially respond with retaliatory tariffs, but also that it wanted to cooperate. And it seems that this cooperative approach is the one that won out in the end, as the two presidents have agreed to start discussing on working groups on migration, on security, and on trade. To your question on the challenges, though, certainly there are many. There have been for some time. And I think the bottom line is that internationally, the fact that the alliance of the United States-Mexico-Canada agreement, the USMCA, is being put into question is giving pause to a lot of investors. Add to that many of the domestic issues that Mexico has, including security, including access to energy, electricity, water. But the fact that investors are no longer certain, as they used to be, that the USMCA was an agreement that all three countries were betting on as a future path forward, and that there's this sense that maybe the bilateral approaches or that the individual approaches might still reign. And I think this is a question that's going to remain in the coming weeks, months, and even years.
And Jody, of course, now we turn our attention to a potential response from Beijing. This will be interesting, right? Because we know that leaders there, policymakers, have not really acknowledged, the sort of whether they perceive to be validity in the accusations that President Trump has made.
Yeah, I mean, there's either two things going with China, and as you know, it's the end of the Chinese New Year, so they're just kind of coming back online there. But at the same time, China, the posture may be not to make too much of this, and perhaps it'll go away, or not to make too much of it and then retaliate in their way. So they really have not, and the markets haven't really responded on the China side too much. The other thing that may be happening is they may be gearing up for a broader trade war with President Trump. Though, interestingly, President Trump on the campaign trail said China was going to be his first target on day one. Well, it's day 15, and China came after some of these other countries. So we'll see. At this point, it could take effect, but we could also see kind of a late-minute, last-night reprieve as well, or perhaps it takes effect and then it is undone within a couple days if there is a similar phone call between the Chinese president and President Trump, the way there was with him and the Mexican and Canadian leaders.
The only certainty is perhaps more uncertainty at this point. Bloomberg's political news director Jody Schneider there in Washington, and our Mexico bureau chief Carolina Millan there joining us as well. We do have some breaking news crossing the Bloomberg when it comes to Salesforce. They're cutting over 1,000 jobs at the start of the fiscal year. At the same time, they continue to hire AI sales workers despite those other cuts as well. So over 1,000 jobs to be lost at Salesforce its latest fiscal year beginning, while simultaneously hiring workers to sell new artificial intelligence products. The displaced workers will be able to apply for other jobs internally, but we don't know yet which divisions are going to be affected. Salesforce really focusing on maintaining profit margins after we've seen pressure from activist investors over the past year. Is expected to report those fourth quarter earnings around the end of February this year. So according to sources, more than 1,000 roles will be affected, and the Salesforce itself has declined to make an official comment then. It couldn't be determined which divisions that we're talking about, but the company has nearly 73,000 workers as of the beginning of last year. So we have heard from the CEO that just because they have a hit new product doesn't mean they ignore those commitments when it comes to scaling the business, and we're seeing perhaps that now, Shery.
Right, Heidi, let's dive deeper into the markets right now because, of course, we continue to trade on those headlines around tariffs as well. Kelvin Tai, Regional CIO at UBS Global Wealth Management, joins us now. Kelvin, always great to have you with us. And you called it when you sent us your note saying that you did not really expect these tariffs on Canada and Mexico to be prolonged for much longer. But then the thing is they never actually even went into effect, right? We saw huge market gyrations because of these headlines. Will we see the same when we get the Chinese mainland markets opening on Wednesday?
Absolutely. The tariff numbers are actually not small, right? I mean, on a prolonged basis, it will cause pretty devastating damage to Mexico and Canada. And the US economy is not going to be scot-free as well, because we think that if the tariffs were actually prolonged, the US economy would probably see a boost to a core PCE by about 0.4%, and the economy itself in 2025 will take a hit of about close to about 0.8%. So I don't think it was actually in the interest of the US government to actually have the tariffs actually prolonged, because it was going to cause a lot of pain unnecessarily so. And on top of that, you've seen the market reaction yesterday as well. And you know, over the night, over the US session itself, the market gyrations were actually very, very large. And I don't think anybody actually benefits from that kind of volatility. And on top of that, a lot of the businesses who are trying to actually increase their capex will probably take a second look at where the situation is and probably delay their capex. And that in turn will likely have a deterring impact on the US economy as well. So we don't think that they will actually prolong this situation. Rather, we think that it's probably more of a bargaining tool, a negotiation tool in that sense.
But the situation is so different when it comes to Beijing, right? I mean, we are expecting that 10% tariff to go into effect in just a few hours. But that's the point as well. 10% is now 25%. Already the Chinese economy relies much less on the U.S., especially after the first Trump administration. And Chinese assets right now have been sold off significantly. How much lower could they go at this point?
Yeah, I mean, you hit the nail on the head. Positioning in the Chinese equities market and even in some of the other asset markets as well is actually a lot lighter today compared to 2018 when we first had the US-China trade escalation in that sense, right? Today, I think I would say that positioning in Chinese equity markets is basically pretty much muted. And you can also say the same for the other Asian markets as well, particularly for Malaysia, Philippines, Thailand, and even Korea to some extent. So I don't think the reaction this time around will be a lot more disorderly than what we had back in 2018. And on top of that, you know, global trade is actually not at its peak compared to the first quarter of 2018. And furthermore, the Federal Reserve is actually not on a hiking cycle. In 2018, we had the Federal Reserve on a hiking cycle as well. So if there is any reaction where the markets are concerned, I think this time around, the markets are likely to be a little bit more orderly and not as chaotic as before. I think back in 2018, we had the MSCI China coming off by close to about 20% as a result of the trade escalation.
Kelvin, does the DeepSeek story change meaningfully the sort of attractiveness of broader Chinese equities?
Not really. We do think that where that is concerned, I mean, on a short-term basis, it will likely act as an overhang until we get further clarity on the demand for computing power, etc. But on a short-term basis, we do think that it actually makes it actually commoditizes the product itself. It makes it more accessible, and that can only be a positive thing on a medium to longer-term basis.
When it comes to currency volatility, are there ways that you would be playing that to try and improve portfolio income?
To a certain extent, yes. We do think that with regards to the Asian currencies, the Korean won, the Malaysian ringgit, and the Indonesian rupiah are likely to be a lot more vulnerable to any weakness where the Chinese yuan is concerned. And of course, if the tariffs do kick in and are prolonged, then we do think that the Chinese yuan might actually weaken to about 7.4 and eventually to 7.5 by the end of this year. We think that where the Indian rupee is concerned, that's probably likely to be a lot more defensive compared to the other currencies, given the fact that its yield at this point in time is still a lot higher, notwithstanding the fact that we do think that the central bank will probably have to cut rates in the second or third quarter of this year, given the fact that the Indian economy is actually going through a cyclical slowdown as well. But nonetheless, we do think that the Indian rupee is probably a lot more defensive compared to the other Asian currencies. So we'll probably try to play the currencies where Asia is concerned in that kind of fashion.
Kelvin, regional CIO at UBS Global Wealth Management. Really good to get your insights. Take a look at some of the stocks that we're watching in this session today, because SoftBank, of course, just announced that joint venture with OpenAI, Sam Altman, on a global tour at the moment. We are also watching Samsung because one of those global tour stops includes Samsung Electronics, Kakao Talk, as well as we continue to watch broader tech markets. More ahead on the Asia trade. This is Bloomberg. take a look at how automakers are trading in the Japanese session right now. We're seeing a rebound after that sell-off in the previous session. Of course, a lot of concerns about tariffs on Canada and Mexico. We are seeing now Mitsubishi losing almost 15% in today's session. They lowered their annual profit outlook by a third because of weekend sales. Of course, already Haidi sector that's been facing lots of challenges, and now with these tariff headlines and threats, we continue to watch this sector very closely.
Well, Tata Motors, Shery, certainly keeping a very close eye on President Trump's trade policies and their possible impact on its crucial China market. The CFO, PP Balaji, told us exclusively that they're ready to reassess their business strategy if necessary.
I think this is the new normal that we are trying to comprehend as we speak, because things are coming thick and fast. So we need, obviously, time to process the changes and, more importantly, how the response happens. Not just vis-a-vis country to country, it's also in terms of what happens to financial markets, what happens to currencies. So I think from our perspective, we are trying to keep it clear and focused, otherwise we'll end up panicking everywhere. Let's take one at a time. If I look at the UK market, which is one of our, because we are an exporter out of UK, the balance of payment UK versus US is the other way around. US exports more into UK compared to the UK to the US. So frankly, I believe this is the task. I mean, this is the data pattern at this point in time. How does that get comprehended? How do people deal with it? We'll have to wait and see. And as far as our exports into China, the domestic market in China itself is concerned, I think the premium luxury business has been reasonably healthy. At the same time, yes, there have been stresses in the last 1 year in the Chinese market, and therefore we are watching it closely. And our plan of action is to ensure that we stay relevant to our customers in that particular market. And so far this year, JLR has performed better than any other player in the market with respect to the supply, the sales that we are doing in that particular market. And we need to ensure that both the product offering as well as the dealer remuneration that we are able to secure in that market is remunerative for the dealers. So let's watch the place. And from our perspective, we'll also want to do is keep the innovation intensity high, so that the customers still feel attracted to our products. Price is just one variable in the grand scheme of things. We need to ensure that we increase the degrees of through which customers assess us. That's how we are approaching it.
But have you reassessed your strategy in light of the tariffs? I mean, have you made changes, for instance, to your strategy?
Not yet. Not yet.
But you may?
We will keep a watch on it. We need to understand how it is going to play out. And obviously, you wouldn't want to overcorrect on this front, because it's also a moving target at this point in time. Let's wait for the data to emerge, and then we'll obviously course correct if needed.
We know that demand in China has been pretty lackluster, and the U.S. market has been able to counter that.
That's right.
Do you see that continuing? What kind of trends are developing?
See, at this point in time, that is the situation, and I believe U.S. will continue to do well for us. And the products are good, and the launches that we are seeing, because earlier, if you go back to the portfolio that we had, the biggest successes for us was Range Rover and Range Rover Sport. The launch of a Defender has actually given us a third leg in that tripod. And as and when we fix and correct and launch Discovery, then that'll be the fourth leg of a proper stool that we will be having. So in that, I think the Defender portfolio is now adding to the additional volume that you're getting out of US, which is also compensating for the relative weakness that you're seeing in China. But we believe that will also change as we go forward, because China is going through its own corrections, and therefore when it comes back again, we hope to have two markets that are firing in parallel, China and US, but let's wait and see how early it comes. But that's not all. We are also seeing the UK business coming back, because UK business had a challenge on insurance and thefts that was causing us grief last year. Now that is behind us because the technology has been fixed, and now we're getting insurance back into the fold again. We also set up our own captive insurance reinsurance to take care of that, so that price discovery is out there. So that's giving UK back into that action. And the kind of launches we are seeing on the Range Rover and Range Rover Sport, the products have done so well. Middle East is becoming an important market for us as well. So I think as the business is getting more and more catering to the premium luxury customers, these people are a sliver that goes across the entire world, and they are responding to the products.
So now different sources of growth.
Different sources of growth are starting to come through. That is balancing the portfolio, which is the reason if you look at the last quarter, we delivered our highest ever Q3 EBIT margin of 9%, which has never happened for the last 10 years as far as JLR is concerned. So we are on the right track on JLR. The key shift that has happened compared to the JLR of the past is the pivot towards premium luxury. It is a brand-led growth. It's a luxury customer that we are dealing with, and the vehicles are actually delivering to the promise that we are putting to the customer. So that's giving us the confidence that whatever may be the storm out there, we should be able to weather it well.
Tata Motors CFO BP Balaji speaking exclusively with Bloomberg Insight anchor Hazinda Amin in Mumbai. We have more ahead on the Asia trade. This is Bloomberg.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word.
As the United States and the EU square up to what could be the next front in Trump's trade war, at risk is the biggest and most integrated bilateral trade and investment relationship in the world. There's no free trade agreement between them, but operating under WTO rules, they enjoy some of the lowest tariff rates anywhere, at about 3%. The EU and the US trade about 850 billion euros worth of goods, with Europe running a surplus of about 155 billion. Meanwhile, trade in services was worth almost 700 billion, where the US runs a surplus of about 100. Combined, the exchange of goods and services was bigger than almost every single European economy on its own, at least for now.
And remember, again, the word tariff. We're going to protect our people and our businesses, and we're going to protect our country with tariffs.
According to Goldman Sachs, a 10% minimum tariff would reduce EU exports by about 150 billion euros every year, shaving off about 1% of European GDP. And Germany would pay the highest price. Germany's effort to de-risk from China has meant the trade relationship with the United States is more important than ever, and new tariffs by Donald Trump could cost Germany 15% of its biggest export market.
Bloomberg's Olive Cook there reporting on the possible impact of US tariffs on the EU ahead of this month's German election. European futures looking like this. We have seen shares just pairing that drop with the other tariffs on Canada and Mexico.
Take a look at how Japanese financials are trading at the moment. Of course, we had seen some broad sell-off earlier this week on some tariff concerns, but right now we're seeing that rebound, especially with the Topix Bank Index gaining ground today and really seeing gains of about 40%. Of course, the rate trajectory here in Japan is one story. And also we had some results. Japan's MUFG reporting quarterly earnings today with the country's biggest lender expected to show it's on track for a record annual profit. Let's get more with our Asia investing editor, Russell Ward. And Russell, we've already seen Mizuho, Sumitomo posting strong results. So what are we expecting from this big arrival?
Yeah, more of the same, basically. So we saw Sumitomo Mitsui and Mizuho both beat expectations. They're on track to post record profits, and we're expecting the same from MUFG. Basically driven by three main things. First and foremost is the Bank of Japan's rate hikes. That's boosting lending income and lending profitability at home after languishing for many, many years with negative rates. The second main factor is the sale of cross-shareholdings. Japanese banks have been dumping or selling gradually, I should say, their shares in their client companies as part of our corporate governance improvements, and they've been booking gains, healthy gains along the way. And then the third main factor is the weak yen, which is improving, the look of their profits that are repatriated from abroad. Now that we know that Japanese banks have been expanding abroad quite aggressively over the years, so those are the three main tailwinds that are supporting Japanese banks' earnings at the moment.
So will the tailwinds also translate to shareholder returns?
That's the big question. I mean, Japanese banks have been doling out shareholder returns, increasing their dividends and their buybacks. But we interviewed the CFO of MUFG, Jun Togawa, and he actually had some very interesting things to say. He's certainly not resting on his laurels. He's not relying on those tailwinds lasting forever. So he wants to use those retained earnings to invest back into the business while also balancing out the need for increasing shareholder payouts. So He wants the bank to improve its return on equity, improve its price-book ratio, all these key metrics, and to a level where the bank will compete on a global scale with European banks in particular, also the US banks, and really to attract shareholders as a top global company, not just a top Japanese bank. So, he's not resting on his laurels, and the bank certainly wants to sustain those growth drivers going forward.
Russell, what about Nomura? We know that there have been some challenges, some cost-cutting there.
Yeah, so Nomura is going to be reporting tomorrow. We're expecting a good set of results from Nomura as well. We had its smaller peer, Daiwa, report last week, reported healthy income from trading and investment banking. The trading really due to the increased volatility last quarter that also benefited the Wall Street banks, and investment banking as well. There's been a real upsurge in deal making here in Japan, for many, many reasons, M&A, equity and debt underwriting. But in Nomura's case, there are a couple of things that could cloud the results. There have been a couple of scandals last quarter, one involving bond market manipulation, which has prompted some clients to take their debt underwriting business elsewhere. That could affect the investment banking and also the trading. And then the other one was quite a shocking scandal involving an alleged home invasion by a Nomura worker who's since been dismissed. But this worker allegedly assaulted and drugged and robbed some elderly clients in Hiroshima. So there's a question there over whether that dented sentiment in the retail side of the business and whether individual investors took their business elsewhere at a time when Japanese individuals are trying to invest more of their savings. So we'll have to look out for those and whether they impacted their results last quarter.
Bloomberg Asia investing editor Russell Ward there. Let's take a look at some of the Asia tech names that are in focus today, and so much of this is really on this OpenAI exuberance that's seeing this part of the world. OpenAI and SoftBank, for example, teaming up to form that 50-50 joint venture to sell AI services to businesses in Japan. We're also watching Samsung Electronics with developments when it comes to JY Lee there as well, ending quite favourably for Samsung. I'm watching Kakao Corporation there as well, advancing on the report of an OpenAI partnership there as well. Let's get more on this. We'll bring our tech reporter, Anil Jewellers. So we're seeing some upside there in some of those sort of related names. What are we hearing about the Japan part of his tour?
Yeah, that's right. So he's been in Japan. He's going to be in Korea today. But Sam Altman, as we know, is sort of on this global tour that kicked off this week. And Tokyo has been one of the first stops, or the first stop. What we're understanding is that they have signed this joint partnership, or this JV. It's going to be a 50-50 split between OpenAI and SoftBank, looking to hire around 1,000 people, and the idea is to sell more of AI services or OpenAI services into Japan, because this is a place where Masayoshi Son, for instance, has said that AI penetration is much lower compared to the US. So these 1,000 people, the idea is that they're going to be going out and speaking to a lot of different Japanese industries, from automakers to retailers, and they're going to, again, try and integrate ChatGPT services into those companies. SoftBank's companies as well, those group companies, they're also going to be using OpenAI products to the tune of around $3 billion a year. So very much a clear win for OpenAI in this, and for SoftBank as well, just really underscores how much the company and Masayoshi Son is continuing to play a bigger role in developing AI around the world. It just comes hot off the heels, for instance, that Stargate announcement in the US a couple of weeks back that also involved SoftBank, OpenAI, Oracle as well. Share price reaction, yeah, we are seeing a little bit more upside, around 1% today.
Yeah, and you mentioned Altman in South Korea today. He's going to be talking to Samsung as well.
Yeah, that's what we're hearing from local media, at least. So this is a global tour, as I said, that Sam Altman is on. So Korea, Japan, but also he's heading to India, for instance, then off to Germany, France. That's all in the space of just over a week. But Korea is to meet with a bunch of different executives. One of those we're hearing, as you said, could be Samsung. We're seeing quite a big share upside today, but that also could be down to the story that came out yesterday, which is, of course, JY Lee being cleared of all charges in a big legal win. But still, Samsung having been perceived as a bit of a laggard in the AI race, that's again positive news. SK Hynix chairman, he could be meeting with him as well. And in addition, Kakao, which is, of course, the big mobile platform or the dominant one in Korea, there are reports that SoftBank or rather OpenAI and Kakao could be announcing some sort of partnership later Tuesday. And that stock, as you can see there, very significant run-up over the past 5 days in anticipation of this possibly. You're looking at about 16% gains.
Annabelle Trollers there with the latest on those AI investments and OpenAI, some Altman's tour around the world. Take a look at how we're trading right now because, of course, we continue to watch that upside coming from the tariff delay, 25% on Canada and Mexico, and the big reversals that we're seeing, especially in the Mexican peso and the Canadian loonie. U.S. futures as well. We had seen stocks erasing in that regular session almost 2% of losses, but still ending in negative territory. We continue to watch some of those sectors that are pretty sensitive to tariff news, including car makers, industrial shares, not to mention, of course, semiconductors. And it's all really about that resurgent U.S. dollar, right? I mean, we had seen that 2-year high level being touched. It reversed and pared back most of those gains after the tariff delay. But it's likely to become an even bigger overhang for Asian stocks here as it narrows room for rate cuts in the region that has seen economic growth slow down already. Bloomberg Asia equities reporter Winnie Su joins us now. So tell us a little bit about how this, because we have pared back some of those gains, but we're still talking about 2-year highs, right?
Yeah, exactly. So it seems like the strength of the dollar is here to stay. And we saw that the 90-day correlation between dollar and Asian stocks is actually at its most negative since March 2023. So we've also got strategist notes recently from the likes of HSBC and also Nomura saying that the dollar strength is one of the key factors of the recent underperformance of Asian stocks. And that sensitivity has actually gone up in the past couple months, especially since Trump got elected as the U.S. president. And that trend, as you mentioned, we saw the U.S. dollar continue to strengthen since Trump was elected. And recently it pared back a little bit because of the delay of tariffs around in Mexico and Canada. However, if we consider that the overall policy is still going to be inflationary, dollar to remain strong, and that's going to pressure the central bank, the Fed, to cut rates, that would actually then delay the rate hikes, the rate cuts to come in the central banks in Asia, and hence will pressure Asian stocks for the near term.
Yeah, tell us a little bit about the potential underperformance.
Yeah, so when we looked at the outflow recently in Asian stocks, actually just January, that was about $12 billion outflow from the EM, the emerging markets in Asia. And that's actually the 7th month of monthly outflow that we saw from this region. And that streak is the most on record that we're seeing from the data that we've been tracking since 2009. And we saw mostly that outflow coming from Korea, coming from Taiwan, because people were fearful of that tariffs weighing on these chip stocks and these chips that have very high exposure to U.S. exports. So people are pulling out that money also because of the DeepSeek news that we're hearing recently. So overall, when we have a stronger dollar, people are looking to pulling money out of riskier assets like Asian stocks and putting that into safe havens like the U.S. dollars or treasuries. So that kind of sentiment right now that we're seeing under Trump is actually kind of like the quite negative for Asian stocks this year.
Where do we see the most impact in Asia when it comes to a stronger dollar?
Yeah, so far, China is definitely one that people are citing just because there's still so much uncertainty around tariffs. So obviously, we're still going to see what happens in between Xi and Trump today at their talks in terms of that negotiation. However, with the yuan around record low that we saw yesterday, that weighs on Chinese stocks. And also because China has a lot of the dollar-denominated debts, that's also negative for Chinese stocks. So recently we are seeing some resilience because of that AI development in the country, and also people are still expecting some domestic support to come in, but that's definitely one of the key markets that we're watching. So people are talking about some other Asian countries like Singapore, Malaysia, Vietnam. These can actually benefit from being the China plus one, which means they can benefit as global companies reshore their supply chains away from China, trying to avoid that tariff. So those are some of the markets that we're watching recently.
Bloomberg Asia Equities reporter Winnie Su here with the latest on the broader markets, and we have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at what we're seeing when it comes to benchmarks. A pretty solid rebound there as we get that sort of reprieve, at least for 30 days, when it comes to tariffs on Canada and Mexico from the US. Still awaiting to see what that reaction from Beijing is on those 10% tariffs as the clock ticks down. We're seeing a little bit of upside there, about 0.5% off the session highs when it comes to equities trading here in Australia, but we are seeing a pretty solid recovery when it comes to miners in particular that had been pretty hard hit in the previous session on those tariff threats. We did get the December household spending, which came in quite strong, and that sort of adds to really expectations that the RBA may sort of be able to do a little bit more going into that February meeting. So watching the impact on the Aussie dollar at this point, not a lot of a move, 62.13. Of course, we've seen the Aussie as one of the trade and risk proxies absorbing some of the impact from the threatened Trump tariffs as well. We're seeing iron ore at the moment looking pretty flat, but largely we have seen a bit of a recovery across metals and some of those broader industrial commodities. Some of that has also been on a little bit of dollar weakness in the previous session as well. Well, Australian Treasurer Jim Chalmers says Australia is prepared for a global tariff war but is not immune from escalating trade tensions. Canberra, of course, has deep political ties with Washington, and its direct exports to the US only accounted for 3% of total shipments in 2023. The US has a large trade surplus with Australia, while China remains Australia's biggest trading partner. And Shery, this is sort of the question as to some of the collateral damage that we could see, right? Not just between the US and some of the countries that it's threatening tariffs and trade action on, but what it means for some of these other trade-reliant nations, the likes of Australia, New Zealand, even Singapore within Asia as well. Let's get some views now from Prudence Gordon, who's the Executive Director at the Australian Centre for International Trade and Investment. Prudence, really great to have you with us. And we sort of pondered this question because we know the downside of what could go wrong if the sort of diplomacy side of things isn't handled correctly. We saw that, in years prior, around the time of the pandemic, and how that sort of came to impact Australia through its alliance with the US, but it's also its trade relationship with China. What do you see as the risks this time around?
Oh, thanks for having me on the show. Look, there are so many risks from this move by President Trump imposing those 25% tariffs on Canada and Mexico and the 10% tariff on China. It really has created, I think, chaos and a far greater level of uncertainty in markets than we've seen, which is surprising considering the amount of uncertainty that's been in markets for such a long time. But in terms of the key, I guess, dangers with this move, it's really undermined faith in the rules that underpin the system. So now businesses who trade, specifically at the moment, businesses in the US who are trading with Canada and Mexico have no certainty about how they should be dealing with the imports that are coming from those countries. It's just multifaceted problems for these companies, but also companies in Australia and around the world who now lack certainty as to how the US is going to treat imports going forward, and then the knock-on effects of those measures that the US has taken.
There's a lot of direct and indirect impact on economies like Australia, as you say. Broadly, we know that in times of more global trade, economies like Australia and New Zealand benefit, and when that pulls back, you see that sort of detriment as well. Is there a way that Australia can sort of position itself to take advantage, perhaps, of the trade uncertainty with the US by sort of leveraging the fact that, you know, we can put forward Australia as a very stable investment environment?
That's obviously an approach that the Australian government took during the last Trump administration, highlighting that Australia obviously has a trade deficit with the US, that we are a reliable ally, that we are a great place to invest. But at the same time, I'm not sure that they're going to be really persuasive arguments this time. President Bush has come in with a much clearer vision for how he wants to use tariffs to progress other policy initiatives. And I think Australia really needs to be preparing for that 20% universal tariff that President Trump has talked about. Because he said, when he says something, he's doing it. You know, however harmful that might be to US consumers and to the global economy, he's progressing those commitments that he made during the campaign.
Prudence, how difficult of a situation is this for Australia, given that we have seen a lot of other third countries that have had poor relations with the United States, for example, getting these tariff threats, lean more towards China. But when it comes to Australia, Australia has had its own issues with Beijing and tariffs.
Absolutely. I think I would be surprised if these moves by the US administration push Australia closer towards Beijing. I think what you will see is what Australia with Japan did under the Comprehensive and Progressive Trans-Pacific Partnership Agreement, and that was where the US had pulled out of the Trans-Pacific Partnership, but Australia and other like-minded countries who see the value in trade rules and open markets came together to continue what they'd started with the TPP. And I think you will see more of that, not necessarily moving towards Beijing, but definitely looking to the European Union, for example, to Japan, to South Korea, to ASEAN countries, to really work together over the next 4 years to try and limit as much as possible the damage done by these really erratic implementation of these huge tariffs.
You mentioned the TPP, and of course that has evolved into a whole different framework already. Are these multilateral settings now a thing of the past, especially with the Trump administration?
I think with the Trump administration, yes, absolutely. And it started under President Obama with the US withholding consensus on the appointment of appellate body members, which really disrupted the World Trade Organization dispute settlement system. But obviously under the Biden administration, the US really only progressed the Indo-Pacific framework agreement rather than any, I guess, usual kinds of trade agreements that we would see the US engaging in prior to President Trump's first administration. So I think for the US, it would be really surprising if they were to re-engage on the free trade agreement kind of negotiation. Obviously, President Trump in his first term renegotiated the US's agreements with South Korea and with Canada and Mexico, but even those renegotiated agreements weren't enough to stop President Trump imposing these new tariffs on Canada and in a month's time Mexico. That said, he did negotiate an agreement with China, which identified specific market access requirements that China was meant to comply with. And under the new trade policy, America First trade policy that the President Trump's second administration's just put out, they want to review China's compliance with that agreement. So whether he wants to progress those kinds of agreements, I think that's something that we're likely to see rather than your traditional multilateral or bilateral or regional free trade agreement.
Prudence Gordon, Executive Director at the Australian Centre for International Trade and Investment. We appreciate your time. And we do have more on Australia Ahead. That's every Tuesday at 11:40am if you're watching in Sydney, 8:40am if you're joining us from Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg. Some of the stories we're following from around the world. A US court has been told that former US President Joe Biden unfairly blocked the proposed $14 billion merger of Nippon Steel and US Steel. The companies are suing, claiming the review by the Committee on Foreign Investment was a sham and violated their rights by not engaging with them. Both companies are now seeking a new review. Indonesia is set to move at least $61 billion worth of state assets into a new investment fund that reports directly to President Prabowo Subianto. Draft legislation shows a new fund called the Danantara will have broad control over capital injections and restructuring. Shery.
Heidi, take a look at the setup as we head towards the Hong Kong market opens, because we are seeing U.S. futures pointing higher and rebounding, of course, from the losses we saw in the previous session as President Trump and Canada and Mexico reached that delay of tariffs of 25%. That's it from the Asia trade. Our markets coverage continues. This is Bloomberg.